Myles, we of course were just discussing that the Chinese government is basically the backstop. Is that right? So in other words, they
Yeah.
can perhaps contain it, but give us a bit of a maybe the ripple effects that the market is also interpreting from the developer.
Sure. If you take a sort of a step back, what I think is happening is that investors around the globe are saying this is sort of a deflationary shock to the global economy. And so what do I mean by that? It's going to slow down growth. There's going to be ripple effects. There's economic effect. I guess the ways that the Chinese situation can impact the economies and markets is through financial contagion, which so far seems isolated, largely isolated. But there's a general economic slowdown going on, and this is a little bit of a pile-on factor. When you see China struggling a little bit, it's going to slow down economic growth in China, and that will sort of ripple out into financial markets in different ways. And for example, you see things like copper prices starting to struggle. China is a big consumer of copper. Iron ore has been really pounded lower over the last few months. And again, China is one of the biggest, if not the biggest, consumer of iron ore in the world. And you also see it in some financial markets, the slowdown being priced, for example, the Aussie dollar. So the Australian dollar, we know that Australia has large export exposure to China, and you're starting to see that a little bit being priced into their currency markets. So you do see the ripple effects, but they seem to be controlled and manageable. And I think that's how it's sort of feeding into the financial market situation right now, is just through a re-rating of our growth expectations lower.
And so where does that leave you in terms of changing your expectations for growth in North America, whether it's Canada, because it's interesting, some of those areas of the market, the copper, whatever, has come down. WTI, though, has managed to stay at around that $70 plus level, but that's also probably because it has its own unique characteristics, which is there has been such an underinvestment over the past number of years. It's been under significant attack. So maybe that's the supply side that is holding it. But how do you see it playing out as it relates to the growth outlook for Canada and the United States?
So I think in North America, we're already, look, base effects alone, growth is slowing down in both Canada and the US because, it's hard to grow at 8, 9, 10% GDP forever. It's effectively almost impossible. So, we're taking a step back. Growth is normalizing back to trend. And I think, when it comes to the Chinese impact on the local markets here, I think it's a much smaller impact, much smaller direct impact on America. America is still it's very large, but it's also a fairly closed economy. So trade as a share of its GDP is not very big. But Canada could feel a little of the ripples. Again, not to the extent that Australia would, but yeah, you might feel a little bit in terms of trade in the export markets a little bit. But I don't, at this stage, I don't think it's a big deal for North America at this stage. Yeah.
Okay. And I just want to ask one more question as it relates to China and where you as a team like to invest. There's been so many concerns about what the government is doing with regulation and what the United States wants to do in terms of saying that that Chinese companies listed in the United States, that there's not enough disclosure. How do you, we get through all of those details? It's very confusing to therefore know, do you actually want to have China exposure, or is there almost too much regulatory risk? People are very divided on this.
I'm of the opinion there's a lot of regulatory risk still. I think the Chinese authorities are very serious with the regulatory crackdown. This could be the early stages of something that's longer and more drawn out, again, to enhance common prosperity. You don't want too many billionaires in China. It just doesn't look good for the politicians. So that's kind of what they're doing. They're going after the capitalists in China. And that, to me is worrisome in the sense that I'm not really sure that it's going to be, a big fundamental game changer, but it's the uncertainty about what could happen that's weighing on valuations for a lot of the Chinese companies. So, for me, if I'm looking, interested in technology companies, I can stay away from China. There's a lot to choose from around the world. I don't have to be in China. So, yeah. So that's, for me, China's not entirely interesting at this stage, even though, prices have fallen, valuations have improved. I still want to get more I think, more clarity on where they're going with this common prosperity mantra.